Now we're heading quickly to 6:30 this morning, and good to have you with us. If you just tuned in, let's try and understand some sage advice as far as markets are concerned. Sanlam Senior Portfolio Manager Nicholas Kunze making time for us this morning, as he always does. Nicholas, good to have you with us. We're going to talk about what's happening with the JSE overall in a moment. Can we just start with the commodities first of all? I'm seeing a lot of people getting nervous about the oil price. We'll bring up the indicators as well, Nicholas. Giving you sleepless nights yet?
Morning, Gareth. Not sleepless nights yet, but certainly oil price not moving in the right direction, as you pointed out. I mean, touching overnight up another %. Obviously, all the events of the Middle East the last couple of weeks coming to the fore, and that was just as we saw oil price actually sliding. So back, closing in that $100 per barrel. And for us South Africans who import all of our inflation, this is not great news.
And then if we just take a look at gold as well, I see that's going up nearly 0.75% based on the numbers I have here. But I see you've got all your fancy screens behind you. I'm seeing 1,937. It's going north. Is that a good or a bad thing for us?
Well, depends which side of the spectrum you're standing on, Gareth. I mean, it's certainly indicating that risk is coming to the fore. And interesting enough, gold hasn't really played that safe haven status for a while. It really hasn't. Even after the Russia-Ukraine, it had a brief pop-up, didn't really stay there. But interesting enough, this time around, it's looking fairly solid, and it's up almost, I would say, close to $120 odd from its lows a few weeks ago. So that in itself telling a story. So yeah, if you're a gold producer, for us in South Africa, it is quite good news. But it's a double-edged sword, Gareth. The other side of it is telling you that there is risk definitely becoming elevated.
Yeah, let's talk about those risks for a moment. I'm going to bring up the currencies for us as well. I see Bank of America reporting as well better than expected earnings, which almost goes in the face of concerns around interest rate hikes, increased inflation over in the US. As we look at this, I'm seeing 18.75 to the US dollar, 19.83 to the euro, 22.83 dollar. What do you read into that for us here in SA?
Yeah, so I mean, earnings season give us something else to look at the moment. Kicked off in the US on Friday, so those big banks, as you pointed out, started reporting. We had JP Morgan on Friday, we had Bank of America yesterday, Goldman Sachs yesterday, Wells Fargo has come out, so all the biggies. They've all been pretty good, as expected, I guess, given they're operating in an environment where the unemployment rate is only sitting at 3.5%. So a very, very different space which these big banks play in. And on the back of that, strong earnings, stronger dollar, also stronger dollar reflecting stronger US consumer as well. We had retail sales out the US yesterday, again much better than expected. Those American consumers are carrying on spending, and that's reflected in a stronger dollar price across the board. And also, of course, those bond yields also leading to that stronger dollar.
Company news. Let's talk, if we could. I don't quite know how to say the company's name. Agribusiness. It's an investment group, Zeder. I think it is. Correct me if I'm wrong, obviously, Nicholas, on that. So an increase in interim earnings for them. So their investors, their shareholders, waking up with a bit of a smile this morning.
Yeah, and you are correct. Zeder is the way you say it. SA Business, great success story. One of the few stocks that not far from its 52-week high. And as you said, waking up this morning, bit of a good news, a special divvy, 10 cents per share coming out on that particular stock. They play in the sort of agri space, and probably all of us at some point of our time have eaten one of the apples, the Cape Span fruit that they export a lot of. And interesting, on the other side of the coin with this rand, which has been weaker, the companies like Zeder benefit as net exporters. So, nice solid set of numbers. And on the back of that as well, that soft commodity business, we don't really talk about it much. But that the price of orange juice futures, next time you buy orange juice, Gareth, those future prices are actually up threefold since the start of this year.
Starting to wonder if there might not be a couple of agri stocks in someone's future as they're busy watching this morning. It's a good one to go after, Zeder, if you're looking to move into that space. Or you can get hold of Nicholas. He'll tell you what to do. Also, can we talk Zimbabwe and their lower platinum prices? We have to watch what Zimbabwe does in their mining sector so closely, don't we, Nicholas? So we're seeing lower platinum prices there. Yes, of course, the ongoing economic uncertainty as well. Why is that important to us? Why do we watch them and their commodities so closely?
Well, because they are very at the forefront of getting that stuff out of the ground and sending it where it needs to go because they need the foreign currency. So it's a dollar-based economy in all intents and purposes. And they are sitting, as we do in South Africa, on one of the world's largest plat deposits. So we need to know what's going on and what they're doing. Unfortunately, what we're seeing at the moment is the price of platinum, which was at one point threatening to, maybe break $1,000 the last couple of months, is back sitting back at 900. In fact, a few days ago it was actually under 900. But that's reflecting a bigger story of the world, of what's happening with geopolitics. The world is certainly slowing down a little bit. And industrial metals, unfortunately, and precious metals like platinum are not in demand. So, yeah, it's a little bit of a worry, but one we need to all keep an eye on.
Yeah, absolutely. I see one of the big platinum miners over in Zim also actually putting the brakes on one of their mines, and that's worrying because it's not just the lack of production, the lack of exports, but now you're going to have, I imagine, a jobs issue there as well. Good move for the miner. I'm not too sure how to say the company's name.
Another one, Teresa, I might need to correct it as well. So yeah, it is a good move, I think, for shareholders. As miners in general, specifically South African miners, over the years had a really bad reputation for allocation of capital. They'd always end up, buying a big miner at the top of the cycle at absolutely the worst possible time and paying a premium for it. Recently, I think they've learned their lessons. We saw the likes of Impala getting out of Royal Bafokeng's holding, all them Platts walking away too, and here's another one too, realizing, actually at the end of the day, we're a public listed company. This is shareholder money, so maybe we shouldn't be chasing things at the moment. So I actually think it's quite a prudent move, and going again, Gareth, what we've seen recently, a much better allocation of capital by these big platinum miners.
Yeah, as I say goodbye to you, speaking of things that we shouldn't be chasing too quickly, is consumers come November. I was going to ask you, as I say goodbye, you want to weigh in on the interest rate increase concerns come November? I imagine someone in your position is watching that quite closely. Do you have a view on that?
It is it's a flip of a coin, Gareth. It's a difficult one. Mr. Kanyagi and his team are notoriously hawkish. I see they're talking up interest rates again yesterday. I think it'll be very difficult to raise rates in this particular environment. They're getting a little bit of a respite with the rand back under 19 again. But if this oil price continues to go up, unfortunately, they might be forced. But at the moment, I'm leaning on the camp. I don't want an interest rate rise just before Christmas. Thank you very much.